We are back.
We're back.
How was the weekend for you?
You could have been better.
Yeah.
Lost all my fantasies.
Oh, yeah.
Very depressing
Yours
Sunday.
truly took you down.
It was going good until that happened, and
It's got to be like,
now I just can't recover.
I'm sure you could look it up online, is probably one of the most hated weekends for wives across the country because NFL football is back on, and it's like nothing else is happening around the house.
Got college on Saturdays. Got Sundays covered up with the NFL.
Sunday, I was a lazy human being. I watched a whole lot of football and was excited that I pulled off the victory on the commissioner.
You didn't. It was your team, your players. Somehow you got lucky. I was projected to win.
Well, I got lucky because your number one pick didn't play at all.
Yeah, that was a huge blow.
And you still played him.
Well, it didn't get taken. I didn't have anyone else to replace him.
Yeah. So I wanted to do this before we even started the podcast today. Today's 9/11. Obviously, there's stuff attached to that, so I just kind of wanted to give a little moment of silence in respect to that date. So we'll just go ahead and do that right now. And now we're back on. I did have it was like a 9/11 tribute workout this morning.
Oh gosh.
Partner workout. Hey, it was extremely difficult.
Have something to do with stairs?
No, it was for the firefighter. I think there was like 343 firefighters that passed away during 9/11, and we had to do 343 calories on the bike, and
that was terrible.
Yeah, it was a lot. It was a partner workout, but I cried and sweated a lot.
Shouldn't have done that. I feel great this morning.
Also, what happened last night was the presidential debate.
Yeah.
That was probably, if you just turn on a TV or any kind of media source today, that's all they're going to be talking about.
A lot of clips.
But we said on the last pod that we would check that out and then go over some of the tax policies that were discussed, which they didn't really go in depth in anything.
Very few.
Right off at the beginning, I think Kamala Harris went over hers briefly.
Yeah.
And then Trump, they didn't even talk about anything.
I don't even think
except
really
for
went
his
over much of it.
Tariffs briefly. Right. But what we can start off with is kind of this. You want to do the homebuyer's credit?
Yeah, I mean, she briefly mentioned it. But again, I haven't really seen too much, as what they're planning on doing with it. Because I could assume, it's probably going to be somewhat similar to the 2008 first-time homebuyer's credit, which it was a mess. And now, what was that? So up to $7,500. Now you're going to go up to $25,000 on this. Is there going to be graduated levels to it, or is it just going to be straight $25,000? What's going to be the repayable nature of it? Do they have any system or thoughts in place on how they can handle it better than the original first-time homebuyer's credit? I mean, yeah, and thought it's going to help people buy homes, but homes are already incredibly expensive now. Then that might just entice sellers to
raise their price
even a little bit more. And so now,
yeah, it was interesting because I looked. This is an article from smartasset.com. They reported back on the 2008, they had 1.5 million people claim that first-time homebuyer's credit. So, and where's that money coming from?
Right.
There's a lot of logistics behind all that, but I just kind of wanted for our listeners touch up on the first time this was introduced. So the Obama administration enacted the federal first-time homebuyer credit in 2008, created a response to the 2008 financial crisis. This is according to smartasset.com. The HERA allowed new homebuyers to get a tax credit up to $7,500 during the first year of this initiative. And then in 2009, a year later, Congress increased the first-time homebuyers amount to $8,000, and I think that's the one was a loan, right? That one, is that the one that they had to pay back?
Both of them they had to pay back. I think. I mean, a little bit before my time. I've just had in the accounting world, but I know I've had to deal with the repayments of those quite a bit. I assume both of them.
No, I think one of them, we'd have to pull it up, but I think one of them, you just got it. And then the other one you had to pay back.
I definitely had some amounts of first-time home buyer credits of the original credit being $7,500.
Maybe it was the other way around. Maybe it was 75 first one, second one you didn't pay back. I have to look that up.
Yeah.
Don't fact check us on that one. But yeah, that there's a lot of people that took that initial credit. My thoughts on the $25,000 would be the same as yours. Is what's that going to do to the price of the home, and then is it going to be a loan? Are they going to pay? Are they going to have to pay this back? Is it just going to be a kind of a quote unquote gift? So, and there's no I can't find any details.
Yeah, I think it's just throwing something out there to try to entice people.
Well, obviously, yeah,
like class president style.
Yeah,
get ice cream every day.
Hey,
but yeah, I would assume there's got to be. It can't just be a free gift. It'd have to be something that's probably repayable over X amount of years. But that's, I mean, a rather large sum. So, you know, if you look at the $7,500, if it's repayable over 10 years, it's only $750 a year. But if you're going to have $25,000 repayable over 10, that's could be a sizable chunk out of your tax return for 10 years. Even if that's the route they go over a 10-year payback or 5-year payback, it's substantially more. So,
yeah, there's definitely going to be. If she gets elected, there's going to be
bunch of
a lot more details to that, obviously,
and probably maybe if it passes.
Yeah. Let's move on to the child tax credit.
Mm-hmm.
So the only thing she really touched on was the kind of the amount of $6,000 being the first amount issued to newborns.
Is it one and under or under one, something to that effect, and then it's obviously increased gradually for different other age groups. But the way they're toting it or talking about it, especially like last night, listened to her talk about it, was like it was the greatest thing ever. Like it was going to have such financial impact on these families and or families with young children as far as them starting a new home, or maybe she was referencing the $25,000 home buyer credit. But I mean, really, child tax credit in large is a non-refundable credit. You know, there is a refundable portion with the additional child tax credit, but they haven't really talked about whether they're going to do any increases to that or not. So for the $6,000 to have a huge impact for some, they have to have the taxable tax liability for it even to matter.
Yeah, it might not even matter at this point. You could have it at $1 million. I mean, it's not.
Yeah, I mean,
that wouldn't help.
Definitely for some families with higher taxable incomes, they're going to be able to take full advantage of it. But if the taxable income isn't there, there's not much effect of it.
Yeah, I was looking at an article from it's ncsl.org, and it kind of goes over the history of the child tax credit. Originally in 1997, this was introduced, and it was $400 for kids under the age of 17. It went up in 98 to $500. It looks like it increased again, and it was made refundable in 2001. And they said that to coordinate with the earned income tax credit. The refundable portion, as we both know, is the additional child tax credit portion. And then by 2009, it says the thresholds were no longer aligned with the child tax credit and the earned income tax credit. But then they passed the American Taxpayer Relief Act in 2012, which increased the federal child tax credit to $1,000. And then in 2017, it doubled to $2,000 with the refundable portion to $1,400. Obviously, during the COVID, it kind of switched to where they made it all full refundable.
Right.
And then it went back to the 2000 and it reverted back to how it used to be.
Yeah.
So obviously the 6,000 is a greater number than everybody else is putting out there.
Right.
Is it all non-refundable? Are they messing with the refundable portion? Those are all still items that are to be determined. Is it a good thing? Sure, you're giving, you're helping, new families out and younger kids out. So that's a good thing. It's just, again, there's no details on any of this.
Yeah. It's a whole bunch of hearsay or speak of now and then lay out details later. So that's just kind of...
That's traditionally how it goes.
Right. So it'll be interesting to see. I'm sure with both parties wanting some sort of increase, there's going to be some bill out there to increase it to what amount that'll end up being. Who knows?
I'm telling if they just did the refundable portion, and that's going to pique a lot of interest.
That's where you
because they keep trying to sneak that fully refundable child tax credit back in. They keep trying to put that back in like every year, and it like we thought it was going to come back this year or this past year, and never made its way through. So we'll see.
Yeah.
You wanted to talk about this other thing
with the startup?
Yeah.
Yeah. Listening last night to it, they threw it out there, which on the face when she said it, I thought it was just going to be straight anybody gets a $50,000 deduction if you have a business or start a business. But obviously it's a portion to the startup costs. And it seems like reading through this, wherever you got this from, it's going to have to be at least equal to what your actual startup costs were. So if you had $100,000 in startup costs, straight expense, it looks like of the $50,000, with probably the rest being amortized. But so I mean, you're taking the amount that's allotted for the $5,000, right? That we currently have available. Yeah.
And they're bumping that to $50,000. That would be my guess that that's what they're doing, and they're probably expanding the max because right now the max is the 50.
The 5.
Well, the 5, but the
up to 50.
Correct.
Yeah.
So what's that going to be?
Expand it out.
And then, how are they going to handle that? Is it still going to be dollar for dollar over the amount of 50? All that kind of stuff.
Yeah. Do they 10x it like they did to the startup expenses now for the year of startup to make it to $500,000? Which, who knows? Reading through this, it sounds a little bit better than what my initial thoughts were last night listening to it as far as
this is from the
hands out
tax advisor.
A straight deduction of $50,000. Like, man, I'm just going to start a little magazine business.
Yeah, no, I mean, I think this could be something great for businesses, and then it's just basically expanding the startup costs for those companies. Traditionally, where it's at 5 now.
Yeah, just for the first year of business.
Yeah.
So it'd be that one I can get behind.
Yeah.
And see how it kind of makes sense, and
again,
wouldn't be too tricky.
I need the details.
Yeah.
We good on the presidential candidates?
Yeah, like I said, we kind of covered some of what they were intending to do already, and they didn't really expand upon much last night for it. So
yeah,
other than those 3 little mentions that Harris had mentioned.
Okay, let's move on to this IRS article I saw in the news.
Yeah,
I think we touch on this in a previous pod, where they were going to crack down on these wealthy taxpayers.
Something similar.
So this one
had actual numbers of 21,000 that hadn't filed.
Yeah. So this is from the IRS.gov. It's U.S. Department of Treasury. IRS announced $1.3 billion recovered for high income, high wealth individuals under the Inflation Reduction Act initiatives. So scroll down just a little bit. But there we go. And I think we do have this on video now. So I upgraded our video portion.
Look at you go.
Yeah. But there were some details in here. So this has been going on for 6 months, and nearly 21,000 wealthy taxpayers have filed their tax returns, leading to $172 million in taxes being paid that weren't.
Oh, is it higher than I've got a 21 mixed up, 125,000 that hadn't filed.
What was that?
I had the two numbers mixed up. I didn't realize it was 125 high income taxpayers who hadn't filed their return since 2017.
Oh, yeah.
Which is insane to me.
Yeah, and in 6 months they've gotten nearly 21,000 of those.
Yeah.
So I mean that's a big boost. I don't know what it's compared to like previous years, but it seems like this initiative in this quote unquote new IRS, this one paid off.
Yeah, that's where they're going to get that 25,000 from.
There you go. They're just going to collect it from everyone. Yeah. But yeah, no, I thought this was good. The other thing I was looking at, like audits, kind of wanted to go over some of the top triggers for IRS audits. And this is by an article from empower.com. And we can just go down them. And if you have any comments, just let me know. Mm-hmm. So the first one they have on here is like just regular math errors or, some kind of typos or anything. I just, tax software usually calculates that correctly. Sometimes there could be things that don't calculate correctly.
Yeah, little small issues here or there, or just the preparers themselves jamming numbers into places and throwing the thing off in a way it was not intended to be.
Yeah. But other triggers would be, high income.
Yeah.
So it looks like, and from this article, it says IRS typically targets people making $500,000 or more. So that's another trigger. Mm-hmm. Unreported income, that's an obvious one.
Yeah, well, that's if the system catches it. But as it gets stronger, upgraded systems that might be start to get a little easier.
Do you think
faster catches?
Because everything gets reported to them. Mm-hmm. Do you think there's ever a time where you submit your tax return and it's like, no, bro, you didn't put everything on here?
I don't know. Probably a long way down the line, maybe it'll get to that. But as the system sits right now, not a chance. I don't think that's in sight for a while.
Right.
Ideally, though, if as far as if they continue to up their systems,
you just put a little bit of AI in there.
Yeah.
And you just submit your tax return, just read your social, and it says, all right, here's what we have on the file for you, and you have this. It's basically the same thing as when you get the letter. It just does it like instantly.
It's a lot of money and manpower to get to that system.
They just collected $172 million.
I think it's going to take a little more than that.
It's happening.
But yeah, I mean, far in the distant future, that could probably be something that actually happens. Mm-hmm.
All right. This fourth one is excessive deductions. You've seen plenty of those.
Plenty of them.
That's where you find those ghost preparers.
Yeah, just throwing numbers anywhere they can fit that just don't make sense to the actual income or situation of a person. Seen a lot of them.
Same with Schedule C filers. Mm-hmm. That's a very common place where people just fudge numbers. Mm-hmm. Claiming 100% business use of your vehicle.
Yeah, when I read that one, I could see from an individual standpoint, possibly those getting tripped up, but I can't imagine those get triggered that often.
I would think that there's a, especially for people that actually, are self-employed, mm-hmm. Write that off pretty common.
Yeah.
And it's like it says in this article, it's nearly impossible that they're used 100%. I
don't think
even if I had like a work van,
yeah.
Like wife's got the other car. Mm-hmm. I'm taking the work van to take the kids to school.
Yeah, like I know my dad's got a work van.
There you go.
And he's got another vehicle.
Don't call your dad.
He still uses it. I mean, I'm kidding. He only drives that for business 100% of the time. He's always working.
Oh, boy.
Cut that.
The next one is claiming a loss on a hobby. What do you know about that one? But the most common one that I was used to seeing was these farms.
Yeah.
Where people say that they have a farm when in theory they have some land and have like a goat.
They're not really generating any revenue year after year. It's always just a loss and maintaining. They got a few cows, a couple goats out there. It's not a real farm, but you see it down certain areas that have a lot of land where people just have these own personal farms, and they try to write off anything and everything.
Mm-hmm.
But
I bought a tractor, which they need to mow, but it's not a farm, so you're not deducting that thing. Moving on to home office deduction, that's a big one. I mean, there's so much of that going on now.
I mean, especially, people have offices in their home, and there are people that really, truly use it regularly and exclusively for business, but there are also people that try to write off sections of their home just because they have their work computer in there, like their living room. They're not, the fact of it having to meet the regularly and exclusively used for business, I'm sure there's not a good percentage of legitimate home office deductions out there.
Especially like where you see like the daycares.
Mm-hmm.
They like write off the whole home.
Well, they have like a percentage of, there is some kind of allowance for it as far as hours of operation goes. So I can see some of those, but I mean, this isn't anything in the taxes. You can stretch it a little bit.
Yeah, like writing off your hybrid schedule.
Yeah.
Writing off your whole upstairs.
Yeah.
Moving on, deducting business meals, travel, entertainment. Obviously, that one's, I mean, that one's probably gets abused a lot.
Oh, especially for like the meals and travel. I mean, you're going out, and especially if you're taking these customers, potential customers, to high-end restaurants and spending $10,000 on a meal, that gets to the point of where they, now, I like to be a part of those meals, but it gets to the point where it's a bit excessive.
Yeah.
And enjoying the lavish part of it.
Mm-hmm. Yeah, I can see, especially people that are making a lot of money, spending a lot of money on entertainment, travel, airfare. I'm sure that's a big one for them. Earned income credit, obviously.
Big area.
A large one. Cryptocurrency or virtual currency. That one's growing rapidly. And like we've stated on other podcasts, is something that the IRS is largely looking into.
Right.
Taking early withdrawals from retirement accounts.
Yeah, I mean, in that area, I can see probably their interest being piqued if it's over a couple-year period and they're always trying to claim some kind of hardship exemption or, trying to avoid the 10% tax penalty at the top of it. One time, probably okay, but if you do it over a multiple period, it's would probably be a red flag to them.
Sure.
Obviously.
And, I mean, look, all these things there's legitimate reasons for all these things to be in the tax code. But as you can see, if you have legitimate deductions or, exemptions, they're going to get abused.
Well, just
someone's going to find a way to abuse it.
All these areas here really are the big areas too that could leave openings for stretching it a little bit further, taking a little bit more liberties on claiming stuff as legitimate expenses. So obviously these are key areas they'd like to keep focus on.
Yeah, and these the audits, they can be a pain for a tax business or accounting firms. They can be very time consuming. And probably like a nuisance, I would think.
Huge nuisance, especially when it is legitimate expenses. There are some crazy things that people have on their returns that pertain directly to their business or their personal life that are completely legitimate, but just seem out of the norm.
Yeah.
So finding the proof and explaining exactly why this is the correct stance to take on the tax return can just be troublesome to any preparer.
Yeah. And that's why I think, you can use some of these programs or these companies that do like audit assistance, kind of like our audit allies. So what they do is basically you enroll your taxpayer into this program, and then if they get audited, then this third party handles and helps with the audit.
Entire audit.
So your business necessarily wouldn't have to deal with the audits themselves, which is a good thing. Some people might want to control that.
Mm-hmm. Certainly.
But that's an option for people that want to spend the time, the money. Maybe you have to hire someone to handle the audits that come through your office. So I think that's a good opportunity to use a program like Audit Allies, because you also are going to be able to earn revenue off those programs that you put on those tax returns. So that's an option out there. And I know a lot of accounting firms, they'll just handle them in-house.
Yeah.
But there also is a third party where you can, have that assistance if you need it.
Yeah. Well, I mean, if you look at it like normal, if it's an accounting firm, generally they are going to handle it themselves because your staff of CPAs and EAs and people who are very knowledgeable in the area of accounting, tax accounting, that can handle these, with relative ease. That doesn't really deter away from their normal day-to-day as far as helping their other clients. But if you're just running a tax preparer business, you either it's A, your main business, or B, your side business, but you're not particularly well-versed in dealing with the IRS or certain areas of the tax code, or have different preparers, and that or your single office greatly distracts away from your normal day-to-day.
Well, not everybody can handle or deal with these, right?
Right. And so, if you're not CPA or EA, there's, you're not.
There's
really
limitations
licensed.
on it.
You got certain limitations. So, having this as just kind of the safeguard and alleviates the stress of having to deal with the audits on your own when you're not as well versed, it's a great option to use.
Oh, yeah.
Great tool to have.
Yeah. I mean, if you don't need to worry about it, then that's a good thing.
Yeah.
I think that might have been everything that we wanted to discuss today. The trade show we are at right now.
San Diego.
Saints
Diego. I won't say the other one.
Yeah. I haven't got any report back from the team at San Diego. They might just be on the beach. I don't know.
Wouldn't blame them.
But I think it's a good show, and we'll probably report back next week on it. And next week we have another show in Vegas. So we'll get some messaging back from that one as well.
Yeah.
But other than that, I think that we're good for today. You good?
I'm good. Sounds good.
All right, man. I'll catch you next week.
All right. Thanks.
See ya.
Bye.